Hi, Ian here from Be a Winning Trader. I just want to look at the British pound versus the US dollar today, and let's see where it has been and where it's more likely to go in the immediate future. Now, when you're trading the markets, and certainly if you're using price action trading methodology, you're trying to form a picture. And this picture is very similar to reading a story in a book. So therefore, sometimes when a market is pretty volatile or is maybe in the complete opposite, not going very far, you want to look at the bigger picture. So the first thing we do on a daily basis when analysing any financial chart is look certainly minimal the daily time frame. So in this daily time frame chart from the pound versus the dollar, you can see that it has fallen from the left right down here. It has fallen from grace. It just so happens that trading price action based on our methodologies, you would have a sell signal minimal at 170. It's now sitting at 153. Now, admittedly, this is some months past, but still, that would have been if you're just taking your signals from a daily time frame and on the vertical bar trading pattern that we teach, this would have certainly been your entry point. And believe it or not, you'd have had that market pretty much from top to bottom. However, we can't trade in the past. We have to look now at the future. So let's look at exactly what or where it may go as we speak. Now today is the 17th of February 2015, and you can see this is a daily bar. You can see yesterday was an outside vertical bar to the downside. The objective was to break yesterday's low today, which it already has done. And the low yesterday was 153.38, and today it had a low of 153.32. So the price action objective of the outside vertical bar on the 16th of February has been achieved. But I want to go back 8 or 9 days to let's look to see, is there a bottom present in place and why there may be a bottom in place. You can see that this market made a slight retracement. It pulled from a low here of 150.33 or 33.5, and it went up to a high of 152.65 and back down again and made a low at around 149.50. Now this low at 49.50, again it retraced. This low here was a lower low than this low to the left, so therefore it was still very much in a downtrend. The market came back down with the objective of breaking this low at 149.50, but what did it do? It made a low of 149.87, and that day it made quite a large range trading day, high volatility day, and pulled away. So therefore we were waiting for this to be confirmed. This low here was actually a higher low than this low. Now this low has been confirmed as being a vertical bar low in place. And what has the market done? It has rallied from that low of 149.87, and it has very recently, just yesterday, went to a high of 154.39. So therefore, at the minute, it very much looks like the pound versus the dollar has changed trend. And based on our price action and our vertical bar trading pattern, we're certainly looking for this market to go higher. Now, where is it going to go? We have to trade what we see. And what do we see? And I can see the next line of resistance, if I pull the horizontal line, is down to roughly around here, which again is where it nearly stopped yesterday on the 16th of February. And those highs there are those lows, I mean, are the low of that there is 154.75, and it went to 154.39. So certainly going to be some resistance around these lows here. But I can see the pound certainly going up to the 154, 155 level as we speak over the next few days. And then it'll be interesting to see its retracement, because it has now made a new higher high, because this high here is certainly higher than this one, and we get this to be a confirmed high, which I admit it is not a confirmed high as we speak. But if this becomes a confirmed high, that means we've had a higher low, we've now had a higher high, so we're making for the next retracement to be a higher low than this low, and that would certainly indicate that the pound has made, certainly in the short to medium term, it has its low in place and it has made a bottom of 149.50, and we're just looking for, on the longer term time frame, we're looking for buy signals. I hope you can take all this in. This is all part of price action trading. It's all what we teach, and it's about forming a story. And this story is very much based on analyzing the whole market and then understanding what the probabilities are of this market going higher or lower. Again, just to flick over to a shorter time frame chart, we're going to go to a 240 minute, which is a 4-hour chart, which quite a lot of analysts like looking at. And we can see, based very much on the vertical bar trading pattern, where we've made higher highs and higher lows. Again, this relates into that what you could see in the daily time frame, but you can see it far more clear on a 240 minute chart, 4-hour chart. This is the low. This low here went back up. It came back down again. These lows here, an intraday time frame, 4-hour time frame, are higher lows than these lows. Therefore, you're looking for buy signals. Went back up, made a higher high. That high there is a higher high than that high. It is now also confirmed higher high. So therefore, we're looking for a confirmed higher low. What did we get? We come back down here. Not only did we make like double bottom formations, but we made a confirmed low here. This low here was confirmed somewhere around here. It's what we teach, that you will know exactly to the very price at the very time when a confirmed low or a confirmed vertical bar high is in place. We're looking then to take further buy signals. What has the market done? It's went from those lows there of 151.95 again as we speak to 153.97, and as I said yesterday, to 154.39. This is all the power of price action and trading it in conjunction with the vertical bar trading pattern. Probably one of the most powerful methods known to trade any financial instrument. I hope you enjoyed this video, and keep a look for further videos to come. Thank you very much.